Welcome to VA Money Matters, where we help you take control of your finances and work towards the life you deserve. I'm your host, Ty, and I'm walking down the path to becoming an accredited financial counselor. My purpose is to motivate and inspire my community to continue to have the discipline required to elevate their finances. Today's topic is one that impacts nearly every aspect of our financial lives: credit scores. We'll break down what a credit score is, how it's calculated, and most importantly, how you can improve it. Whether you're building your credit score from scratch, repairing a damaged score, or just looking to keep it strong, this episode has something for you. Let's dive in. So, what exactly is a credit score? Simply put, it's a 3-digit number that represents your credit worthiness. How likely are you to repay borrowed money? Lenders use it to decide whether to approve you for loans, credit cards, mortgages, and even rental applications. The most common credit score model is the FICO score, which ranges from 300 to 850. Here's a quick breakdown of the ranges. If you have a score between 300 and 579, that is labeled as a poor score. If you have a score between 580 and 669, that's labeled as a fair score. If you have a score between 670 and 739, that's a good score. If you have a credit score between 740 and 799, that is labeled very good. And the top tier, if you have a credit score between 800 and 850, that is labeled as exceptional. A higher score means you're a lower risk borrower, which can qualify you for better interest rates and loan terms. But credit scores aren't just for loans. Did you know that some employers and insurance companies check your credit score too? It's everywhere, so understanding it is crucial. Now, let's talk about how this number is calculated. Credit scores are calculated using 5 main factors. Here's the breakdown. 1. Payment history. That's 35% of your credit score. This is the most important factor. Lenders want to know if you pay your bills on time. Even one missed payment can significantly lower your score. Yes, one missed payment. 2. Credit utilization. That's 30% of your credit score. This refers to how much of your available credit you're using. For example, if you have a credit limit of $10,000 and you've charged $3,000, your utilization rate is 30%. The lower your utilization, the better. Third factor, length of credit history. This makes up 15% of your credit score. How long have your accounts been open? A longer history shows lenders you have experience managing credit. Fourth factor, credit mix. This makes up 10% of your credit score. This looks at the types of credit you have, like credit cards, mortgages, car loans. A good mix can boost your score. Factor number 5, new credit inquiries. This makes up 10% of your credit score. Opening too many new accounts in a short period of time can hurt your score. Each inquiry lowers it slightly for about a year. Here's a quick pro tip. If you're shopping for a loan, like a mortgage or auto loan, Multiple inquiries within a short period of time are often treated as a single inquiry. So don't be afraid to shop around for the best rates. Okay, so why should you care about your credit score? Well, here are some real life scenarios where your credit score can make or break your financial opportunities. Interest rates. A higher score could save you thousands on a mortgage or car loan. Facts. Approval odds. A low score could result in denials for credit cards, loans, or even rental applications. Next up is security deposits. Utility companies and landlords often require deposits for low score applicants. Another one is job opportunities. Some employers check credit reports as part of the hiring process. And you definitely don't want your credit score to hinder you from getting a job. Improving and maintaining your score isn't just about loans. It's about improving your financial freedom and reducing unnecessary costs. The first tip is an obvious one. Pay bills on time. This is non-negotiable. Set up reminders or auto pay to ensure you don't miss any due dates. Second tip, lower credit utilization. Aim to use less than 30% of your available credit. Ideally, keep it under 10% for a bigger boost. Third tip, check your credit report. Visit annualcreditreport.com to get free credit reports from the 3 major bureaus, Experian, Equifax, and TransUnion. Look for errors and dispute them. Credit card companies mess up too. You don't want mistakes hindering your credit score. Tip number 4, don't close old accounts. Even if you're not using an old card, keeping it open helps your credit history length. We talked about that earlier. Fifth tip, hard inquiries. Only apply for credit when necessary. Soft inquiries like checking your own score don't hurt your credit. Tip number 6, become an authorized user. If someone with good credit adds you to their account, their positive history can help your score. Tip number 7, use a secure credit card. This is great for building or rebuilding credit. You'll put down a deposit that acts as your credit limit. Tip number 8, negotiate with creditors. If you're struggling, contact your creditors to work out payment plans. Avoid accounts going to collections. Pretty useful tips, right? Remember, improving your credit score is a marathon, not a sprint. With patience and consistent effort, you'll see progress. Before we wrap up, let's bust some common credit score myths. Myth number 1, checking your own credit score lowers it. The truth is, this is a soft inquiry and does not impact your score. Myth number 2, you need to carry a balance to build credit. The truth is, paying your balance in full every month is better for your score and saves you money on interest. Third myth, closing a credit card improves your score. The truth is, closing accounts can hurt your score by reducing your available credit and shortening your credit history. The fourth myth, you only have one credit score. The truth is, you have multiple credit scores, depending on the model and bureau used. We've covered a lot today, from understanding what a credit score is to tips for improving it. If you just take one thing away from this episode, let it be this: your credit score is a powerful tool. By understanding and managing it wisely, you'll open doors to better financial opportunities. If you have enjoyed today's episode, don't forget to subscribe to VA Money Matters with Ty and share it with someone who could benefit. And hey, if you have questions or topics you want me to cover, send them my way. And if you need a financial coach to help you with your credit, make sure you check in the description of this video and the comment section, and you can book a session with me. Currently, I'm offering my first session free, so make sure you check that out. Thanks for tuning in, and remember, your financial health matters. Until next time, I'm Ty, signing off. Peace.